Bismillahirrahmanirrahim. Assalamu alaikum. Welcome to my YouTube channel. My name is Nidarana. First of all, I request you please follow, share, and subscribe my YouTube channel. Today our topic is ratio analysis, managerial finance. Financial ratios, market ratios, profitability ratios, debt ratios, activity ratios, liquidity ratios. Liquidity ratios firm's ability to satisfy its short-term obligations as they come due. Liquidity ratios, current ratios, quick ratios. Current ratio equal current assets over current liabilities. Looks at the ratio between current assets and current liabilities. Assets over current liabilities. Mostly current ratio of 2 is considered acceptable. For Atlas Honda, current ratio is less than acceptable but improved during last 5 years and remained stable in last 2 years at level of 1.145, which is quite acceptable. Quick ratio equal current assets minus inventory over current liabilities is similar to the current ratio, but it excludes inventory from current assets. Current Quick ratio equal current assets minus inventory over current liabilities. A quick ratio of 1 or greater is acceptable. For Atlas Honda, quick ratio mostly remain below 1 and remain deteriorating. Liquidity ratios. According to company financial statement, they are in strong liquidity position, but their liquidity position is not as good as they stated. Company liquidity position appear to have remained stable but below acceptable criteria. Company may have problem to satisfy its short-term obligations when they come due, but it is also a fact that company do not have pay all its short-term obligations at the same time, so company should manage to pay its short liabilities. Activity ratios measures the speed with which various accounts are converted into sales or cash inflows or cash outflows. Inventory turnover ratio, asset turnover ratio, activity ratios, average collection period, average payment period. Inventory turnover equal cost of goods sold over inventory, measures the activity of a firm's inventory. Inventory turnover equal cost of goods sold over inventory. Inventory turnover for Atlas Honda is improved very fast during last 5 years, and a level of 16.3 is quite remarkable. Higher inventory turnover leads to reducing holding cost and increase the net income and profitability, but company need to remain conscious about inventory turnover because higher level of inventory turnover may indicate inadequate inventory level, which may lead to a loss for the business. Asset turnover ratio, assets turnover equals sales over total assets, indicates the firm's efficiency to use assets for generating sales. Assets turnover equals sales over total assets. It is generally considered that the higher the firm's total asset turnover, the more efficiently its assets have been used. Asset turnover for Atlas Honda is improving and have excellent level. Average collection period. Average collection period equal accounts receivable over annual sales multiplied 365, shows the time needed to collect accounts receivables. Average payment period. Average payment period equal accounts payable over account purchases multiplied 365 shows the time needed to pay accounts payables. Average payment period equal accounts payable over annual purchases multiplied 365. Average payment period is decreased as compared to 2009, but company still using its credit worth very well and taking full advantage of credit period from suppliers. Activity ratios. The company asset performance appears to be in a good shape. It is clear that company has efficiently used the various components of working capital cycle. It has been able to effectively control the receivables and inventories. Debt ratios indicates the amount the firm uses to generate profits from others' money. Debt ratios times interest earned ratio, debt ratio, fixed payment coverage ratio. Debt ratio equal total liabilities over total assets. Measures the proportion of total assets financed by the firm's creditors. Debt ratio equal total liabilities over total assets. The higher degree of debt ratio shows the greater the firm's degree of debt ratio for Altus Honda in 2008 was nearly 61%, which was not very favorable for the organization, but during the last 5 years the debt ratio decreased continuously and reached to nearly 50%, which is not very good but fair enough. Interest times interest earned ratio equal earning before interest and taxes over interest measures the firm's ability to make contractual interest payments. It is also called interest coverage ratio. At the end, please follow, share and subscribe my YouTube channel. Thank you. Allah Hafiz.